What is happening, crypto fam? Get ready for an absolutely explosive episode of Bitcoin Bulletin. The market is moving at warp speed, and if you're not plugged in, you're missing out on the action. We've got seismic shifts, unexpected plays, and critical junctures that could redefine the landscape. First up, a colossal options expiry is on the horizon, potentially unleashing a torrent of volatility, while a major exchange announces a significant futures market shutdown. What does this dual event signal for the future of crypto trading? Then, we're tracking a major political figure's substantial investment into a specific cryptocurrency, sending its price soaring and sparking intense debate about its real-world utility and market impact. Is this a game changer, or just another speculative bubble? And finally, we're looking at predictions that could flip the script entirely, with one major digital asset potentially outperforming Bitcoin in the coming year. Could institutional capital be shifting its focus? Stick around to get the full breakdown on all these stories and more. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Massive market shakeup incoming. The cryptocurrency world is bracing for a period of intense volatility as Bitcoin's options market faces a staggering $15 billion expiry. This colossal event, occurring at a critical juncture, is being closely watched by traders and analysts alike for its potential to trigger significant price swings. Simultaneously, a major player in the crypto exchange space has announced the shutdown of its futures trading services, a move that could reshape market dynamics and liquidity for a vast number of users. The sheer scale of the Bitcoin options expiry, with $15 billion in notional value set to expire, represents a massive concentration of financial instruments that could influence market direction. Options contracts give holders the right, but not the obligation, to buy or sell an asset at a predetermined price, and when a large volume of these contracts expire, it can lead to increased trading activity and price discovery. Historically, significant expiry events have been correlated with heightened market volatility, as traders adjust their positions and potentially realize gains or losses. The anticipation surrounding this expiry is palpable, with many speculating on whether it will lead to a sharp upward movement, a significant correction, or a period of consolidation. Adding another layer of complexity and potential market disruption, Binance, one of the world's largest cryptocurrency exchanges, has decided to cease offering futures trading services to users in certain regions. This strategic decision, while specific to particular jurisdictions, sends ripples across the global trading community. Futures contracts allow traders to speculate on the future price of an asset without owning it directly, and they are a crucial component of sophisticated trading strategies. The withdrawal of such a service from a dominant platform like Binance can impact liquidity, trading volumes, and the accessibility of derivative products for affected users. It also raises questions about regulatory pressures and the evolving landscape of crypto derivatives. The confluence of these two major events, a massive Bitcoin options expiry and a significant futures market shut down by a leading exchange, creates a critical inflection point for the crypto market. Traders are on high alert, analyzing the potential impact on Bitcoin's price as well as the broader altcoin market. The interconnectedness of these markets means that events impacting Bitcoin often have a cascading effect on other digital assets. Analysts are dissecting various scenarios, from a potential short squeeze or sell-off driven by the options expiry to shifts in trading behavior due to the futures market changes. Audience impact. This dual development has ignited widespread discussion across crypto forums and social media, with many traders expressing concern over potential market instability, while others see opportunities in the anticipated volatility. Keep your eyes locked on this space, as the fallout from these events is just beginning to unfold. Next up, we're diving into a surprising political investment that's making massive waves in the crypto world. Political power play in crypto. In a move that has sent shockwaves through the digital asset space, Donald Trump's media company has made a substantial investment in Cronos, CRO, catapulting its price by an astonishing 154% before a recent pullback. This significant bet on the cryptocurrency signals a potential integration of blockchain technology into mainstream social media platforms. But market watchers are now closely monitoring key support levels to see if the rally can be sustained. The Trump Media and Technology Group, TMTG, has reportedly invested $6.42 billion in Cronos, a significant portion of which includes $1 billion in CRO tokens and a $5 billion credit line. This injection of capital led to a dramatic surge in CRO's price, reaching a 3-year high of 0.389 in late August. The immediate aftermath saw the token's value climb by 154% over 3 trading sessions, capturing the attention of investors and speculators worldwide. This surge highlights the potent impact that high-profile endorsements and investments can have on the volatile cryptocurrency market, often overshadowing fundamental utility in the short term. Following this explosive rally, Cronos has experienced a correction, with its price declining by 14.37% in the last 24 hours, now trading around the 29 cents mark. This pullback has brought critical support levels into sharp focus. Analysts are particularly watching the 29-cent support level, with a breakdown potentially signaling a further decline towards the $25.27 range. Technical indicators are also being closely scrutinized. CRO's price action shows it testing a support range between 0.172 and 0.267. A breach below 0.244 could indicate a deeper correction towards 0.1723, while a bounce from the $29.34 zone might reignite bullish momentum. Fibonacci retracement levels also point to resistance at 0.3126 and 0.2728, with longer-term targets at 0.3999 and 0.5425 if these levels are overcome. The strategic intent behind TMTG's investment appears to be the integration of the Cronos blockchain into Truth Social, Trump's social media platform. The acquisition of approximately 19% of the total CRO supply positions TMTG as the largest single holder, with CRO potentially serving as the platform's native token. This could significantly boost CRO's utility and adoption, particularly among Truth Social's user base. However, some market observers are concerned that the rapid price appreciation may have outpaced fundamental value, especially as trading volumes have seen a notable decrease. Amidst this volatility, attention is also turning towards alternative investments. Bitcoin Hyper, a Layer 2 project built on Bitcoin, has garnered interest by raising $12.6 million in its presale, offering an 88% staking yield. This shift in investor focus highlights a broader trend where projects offering high yields and innovative solutions are attracting capital, even as established assets like CRO navigate speculative surges and corrections. Audience impact. The crypto community is abuzz with discussions about the implications of this major political investment, debating whether it will legitimize crypto further or if it's simply another speculative maneuver. Will this political backing provide lasting stability for Cronos, or is a steeper fall on the horizon? Stay tuned as we break down the next major prediction that could shake up the crypto world. Bitcoin's strategic pause, setting the stage for a massive bull run. While the broader market digests recent volatility, a fascinating analysis suggests that Bitcoin's current pullback might not be a sign of weakness, but rather a strategic entry point. Experts are pointing to a critical support level around $105,000 as a potential catalyst for the next significant bullish surge, a prediction that has ignited optimism among investors anticipating new all-time highs. The narrative surrounding Bitcoin's price action has shifted from immediate gains to a more nuanced view of market cycles. Following periods of rapid ascent, pullbacks are often seen as healthy corrections that consolidate gains and build a stronger foundation for future growth. In this context, the $105,000 mark is being identified as a key psychological and technical level. Holding this support could signal strong underlying demand, preventing a deeper correction and setting the stage for an aggressive upward trend. This perspective suggests that rather than fearing the dip, investors should be looking for opportunities to accumulate, anticipating a powerful rally that could propel Bitcoin to unprecedented heights. This analysis is particularly compelling given the ongoing institutional adoption and the increasing integration of Bitcoin into traditional financial systems. As more sophisticated investors and corporations allocate capital to Bitcoin, the demand dynamics are becoming more robust. A successful defense of the $105,000 support level would likely attract further institutional inflows, creating a positive feedback loop that could accelerate the bull market. The technical indicators supporting this view often involve volume analysis, on-chain metrics, and the behavior of long-term holders, all of which are being closely monitored by market participants. The potential for Bitcoin to reach new highs is a recurring theme in market commentary, and the current consolidation phase is being framed by some as a crucial calm before the storm. If Bitcoin can maintain its upward trajectory after consolidating around this key support level, the subsequent rally could be even more explosive than previous ones. This scenario hinges on sustained buying pressure and the absence of major negative catalysts, allowing the market to build momentum towards new price discovery. Furthermore, the broader economic environment and global financial policies can play a significant role in Bitcoin's performance. As inflation concerns persist and traditional markets experience fluctuations, Bitcoin continues to be viewed by many as a potential hedge and a store of value. This macroeconomic backdrop could provide additional tailwinds for Bitcoin, especially if it manages to break through significant resistance levels following the consolidation phase. Audience impact. This perspective has generated considerable excitement, with many investors viewing the current price action as a prime opportunity to enter the market or increase their holdings, anticipating a significant upward move. But what if the narrative is shifting even further, with another major digital asset poised to steal the spotlight from Bitcoin? Prepare yourself for a prediction that could redefine institutional investment strategies in the coming year. Ethereum ETFs poised to eclipse Bitcoin in 2025, a major investment shift. In a bold forecast that could signal a significant alteration in institutional investment strategies, analysts are predicting that Ethereum exchange-traded funds, ETFs, may outperform Bitcoin ETFs in 2025. This projection suggests a potential reallocation of capital towards Ethereum, driven by its expanding ecosystem, technological advancements, and growing utility beyond just a store of value. The cryptocurrency market has long been dominated by Bitcoin's narrative, often viewed as the primary digital asset for institutional investment due to its first-mover advantage and established market presence. However, Ethereum, as the second-largest cryptocurrency, has been steadily building its own momentum. The anticipation surrounding the approval of Ethereum ETFs in major markets following the successful launch of Bitcoin ETFs is a key factor in this forecast. If approved, Ethereum ETFs could unlock significant institutional capital, potentially driving demand and price appreciation at a faster rate than Bitcoin. Several factors contribute to the bullish outlook for Ethereum relative to Bitcoin. Ethereum's ongoing transition to a proof-of-stake consensus mechanism. The merge has significantly reduced its energy consumption and paved the way for future upgrades like sharding, which promise to enhance scalability and reduce transaction fees. This technological evolution positions Ethereum as a platform for a wide range of decentralized applications, dApps, including DeFi, NFTs, and the metaverse, creating a robust ecosystem with diverse use cases. The utility and innovation happening on the Ethereum network are generating substantial developer activity and user engagement, which could translate into stronger long-term value appreciation. Furthermore, the narrative around Ethereum is evolving. While Bitcoin is often positioned as digital gold or a store of value, Ethereum is increasingly seen as a programmable money or a foundational layer for the digital economy. This broader utility could appeal to a wider range of institutional investors looking for exposure to innovation and growth in the blockchain space. The potential for staking rewards, coupled with the network's utility, offers a compelling investment thesis that differs from Bitcoin's primarily scarcity-driven model. Analysts suggest that if regulatory hurdles are cleared and Ethereum ETFs become widely available, institutional investors may find them more attractive due to the potential for higher returns and the diverse applications within the Ethereum ecosystem. The success of Bitcoin ETFs has already demonstrated a strong appetite for regulated crypto exposure, and Ethereum is well positioned to capture a significant portion of this growing market. While Bitcoin will likely remain a foundational asset in many portfolios, the prediction of Ethereum's outperformance highlights a potential diversification trend among institutional players. This shift could be driven by a desire to capitalize on Ethereum's technological advancements and its role as a platform for innovation, rather than solely focusing on Bitcoin's scarcity and store of value proposition. Audience impact. This forecast has sparked considerable debate among investors, with many questioning whether Ethereum's technological advantages and expanding ecosystem will indeed lead to its dominance over Bitcoin in institutional adoption. These are the critical updates shaping the crypto landscape right now. Make sure you're subscribed so you don't miss our next deep dive. That's a wrap on a jam-packed Bitcoin bulletin. We saw a massive Bitcoin options expiry coinciding with a major futures shutdown, Trump's big bet on Cronos causing a frenzy, and the bold prediction that Ethereum ETFs could outshine Bitcoin next year. Don't miss out on any of the action. Smash that like button, subscribe to the channel, ring the notification bell, and let us know your thoughts in the comments below. Follow us on all social platforms for even more crypto insights. We'll see you next time.